cash flow worries. Lots of business owners have them and will continue to have them, and I've certainly had them too. In this video, I want to talk to you about my recent cash flow worries and how I overcome them, so in turn you can do the same. One way to fix all cash flow problems in businesses is to massage the like button just underneath this video and subscribe to the James Sinclair YouTube channel. Now obviously that was a slight joke, but there is some truth to that, because the more people that watch my videos, the more that you like my videos, the more people get to watch my videos, and the more money YouTube give me for making YouTube videos in YouTube AdSense. What do we make? About £440 a month from YouTube, or dollars, whatever it is. But yes, YouTube is sending us a little bit of cash flow each month. So thanks YouTube, and thanks for watching, because you're making that happen. Okay, cash flow worries in a business. Here's the aim that you want to be when you're in business. I suppose the utopia is to have 3 months cash flow in the bank. So say your business costs £100,000 to run per month, or you'll have expenses of £100,000. Wouldn't it be a nice place to have £300,000 of sitting cash in the bank? And I think that would literally just remove all stress from business owners. But that's difficult. Most people don't even have a month's salary in the bank, and most businesses burn through cash, especially in the early days as they're growing aggressively, if you're truly entrepreneurial, just like me. And so what I now do is I make sure that I have a buffer in my personal account, and I become the business's overdraft if we are doing something acquisition-led, buying other companies or investing in our own business. However, I've come across some business owners that are awash with cash in the bank. They have really good cash flow, and I thought we could discuss in the video what's the traits of those people that I've come across. Now, one of them is the type of business and sector they're in. The other one is what they do in their business. And this is the crucial one. How do they behave in their business? What's the role they take on in the business? It's crucially the ones that seem to get through cash flow much easier are the ones that are marketeers of their business rather than operators of their business. I.e., these are the types of business owners that are focusing on getting sales into the business, and that's what they see as their primary role. 80% of business owners that I come across, especially those that have been on the James Sinclair podcast, and I urge you to go and listen to the James Sinclair podcast, where I'm coaching business owners live on air. Most of them have cash flow problems and don't have enough cash coming into the business, because most of them act as operators of their business. Then when I have someone come on that's successfully exited a business, then has received a lot of money for exiting that business, or have lots of cash in the bank, is because they act as though they're marketeers and salespeople of their business full time, and then dive into the operations on a minute basis compared to the amount of time they spend on actually getting cash into the business. Rule number one of fixing cash flow problems is getting yourself into that mindset of focusing on getting cash into the business. Most people operate their business. That's number one. Next is choosing businesses that don't start from zero each month. So if you're doing a cash flow forecast for your business, and say you own a company called Netflix, and you've got 1 million users all paying you 10 quid a month, it's really easy to cash flow forecast that business via a business, for example, that sells cars every month. Every month they start from zero, and they need to find new people to buy cars each month. That can be really stressful for business owners. And another reason for that business being really stressful, and I've coached some people in these sectors, is they need huge amounts of capital to actually go and buy the stock, and then they might have to wait 30, 60, 90 days to sell the stock. So that recycling of cash is causing them real cash flow pressures. So try and think, how can you be like Netflix and have really predictable cash flow, knowing what's going to come into your business? And my business was really difficult in the early days because I started from zero each month, and it's when I started bolting on direct debit memberships and my day nursery business, and also when I bought Rossi ice cream. It's a really good business because we get customers that repeat from us each month. So when we find a wholesale customer for Rossi ice cream, it's a restaurant, for example, or an ice cream parlor or a hotel, every month they keep on ordering. So we can really predict cash flow much easier than if we was just selling one ice cream to one person every month. In 2009, when I was running my play centre businesses, I nearly lost them all because the weather affected the business so much. And another big thing to avoid with cash flow businesses is avoid businesses where weather can have a huge effect on your turnover and income. I just literally nearly lost everything just due to a sunny summer because I had indoor trading businesses and no one wanted to come inside, and that's why I added day nurseries to my business, because what I worked out was people would trade with me for 4 years. They would come every day, whether it rained, snowed, shine or sun or snowed. So always look out for those horrible weather dependent businesses. And if you've got one, think about what you can bolt on to give you stronger residual income. Next, I don't know why, but my belief is choosing companies where other people's money wants to invest into them is a good sign that this is going to be a cash flow positive business. What do I mean by that? Well, people want to invest into Facebook and buy shares in Facebook or in Apple or in Google. Why do we want, or property, for example, why do people want to do that? Why do they want to take their hard-earned savings and invest into those types of companies? It's because they know that they're always going to be cash generative. The problem is with entrepreneurs and entrepreneurial-led companies, people usually see them first as an opportunity. Oh my God, that'll just make money. It's so obvious. Well, no, it's not always so obvious. So check what venture capitalists, private equity are investing into, because usually they're investing into companies, and when they continually invest into them, like you've always got private equity throwing money into care homes, into childcare, into online residual fintech companies like financial services and financial tech companies. So always look where that money's going into, and you'll tend to find they're good cash positive businesses, and maybe you want to sort of steal some of their data and analysis that they put into where they're going to invest cash into your own business ventures. Now let's have a look at what I think are 4 great levers to improve cash flow in a business. Now the first one is margin, and then the 3 exceptional levers that I've just seen all the time that improve businesses are having a good average customer value. So when someone transacts with your business, they're spending £100 to £1,000 or even more, and they're transacting regularly, so you're not just getting them to transact once with you, and the lifetime value is forever. And the supermarket would be the best example of this. Every time you go to supermarket, you spend £100, £150. You're doing it once or twice a week, and usually stay with the same supermarket for the whole of your life. And supermarkets are making decent margins, especially if they import stuff and other things. They only make 20-30% margin. They even have loss leaders, but when they have a blended margin, they're into a really good place, and they're really great businesses, because people are spending cash all the time and they don't pay people for 60, 90, 120, 180 days. So they're generating so much cash, and every day more cash is coming into the business. So really on that point, you want to choose businesses that are cash generative straight away. And I look at my businesses, every day cash comes into the business. I don't have to wait for people to pay me in most of my companies. If you're giving people credit accounts, you always want to have people pay you as well straight away, so that you have a mixture of cash always coming into the business. Let's talk about margin though. Supermarkets do make lower margins, but they turn billions to make millions. They still make good margins. We all know supermarkets make huge profits, but they will make less margin than a profitable SME needs to make. Basically, you want to be getting into a position where you have what I call the ×5 rule. So if I bought this pen for £1, you want to sell it for £5. In reality, people think, right, I'll buy this pen for £1 and sell it for £2. And here's my quick rule of maths for running a great business. It's the rule of 5. Right then, gang, on this whiteboard is my little, just a really simple process that I try and teach my staff, and it's called the split by 5 ways. Where does every pound or every dollar that comes into your business? Well, 20% for the product that we're buying in, 20% for the overhead if you've got a factory, if you've got a warehouse, 20% for your staffing costs, 20% for tax, whether that's sales tax, VAT, corporation tax. You just put in 20% aside for that stuff, and then 20% for you or the business as your contribution and profit into the business. And that's a really simple formula that I use. Here's the thing though, people don't take into account this stuff. That's why I think loads of businesses are only making 2 or 3% net profit. If you can follow a formula like this and find lines and products and services where you can do that sort of stuff, you'll always have a good cash flow business. But if you go down the route of buying something in for £1 and then selling it for £1.50, you've got to sell so much to make money, and that should cause you cash flow problems. So try and use my ×5 rule, 20% for the product, 20% for the overhead, 20% for the staff, 20% for tax, and 20% for you, and you should have plenty of cash flow sloshing around your business. Hope you've enjoyed this video. I'll be back with another video in just a few days' time. As always, subscribe to the channel, make sure you hit and massage that like button, comment below if you've got any ideas that I might have missed. See ya.